What is a market? A market is a place where you would buy and sell products. The typical market we are used to is when the price is already set and the consumer can choose to either buy or leave the product. For an example, in supermarkets, fruits can be at $1 per pound. We as consumers can choose to either buy it or don't. There is another type of market called an option market. An option market is where buyers can compete on the bids that they're willing to pay for the product. The sellers can compete on the offers that they're willing to sell that product for. For an example, in a seller's perspective, a big market that has multiple sellers. Seller number 1, I am selling a Coach bag for $100. Seller number 2, I am selling the same Coach bag for $70. Seller number 3, I am selling a Coach bag for $50. In a buyer's perspective, a big market that has multiple sellers. Buyer number 1, I am willing to buy a Coach bag for $70. Buyer number 2, I am willing to buy a Coach bag for $50. This is exactly how the stock market works. It's an auction market and it has no set price. There are 2 types of markets. A primary market is when the stock is being traded for the very first time. And the secondary market is when it's been traded every time after the first time. Somebody already owned the stock or shares before you, which puts you in the secondary market. IPO, Initial Public Offering. This means the first time that a stock of a private company is offered to the public. It is very hard for regular investors to get shares at the IPO. For an example, a company owner has 100% of ownership. You want to expand your business, however, organic growth of revenue takes too long, so you go to a private investor. You give the private investor a certain percentage of the share to grow your company. Now that the company is big, you want to grow the company even bigger. You and your investor talks about going into the public market. You go to an underwriting firm. The company will give you a valuation and calculate how much the company can raise capital for the firm. The company that wants to go to the public market will go towards IPO, Initial Public Offering. The company that is underwriting for the company will first sell it in the primary market, so it will build connections with what the underwriting company has. This is an example of selling in the primary market. After this transaction is all done, it will move on to the secondary market.